Hi, welcome to the market alert for Thursday, the 3rd of December 2015. So, two losing trades in the first part of the session as the market waits for Yellen to actually speak. Around 50 points loss there, well, total of 50 points loss. And the market then trading sideways. And here you can see me rescaling the chart in real time. The trade's already in progress. And what I've done, you can see the initial risk stop has been removed. The market's gone through the scalp level of 17,800. And what I'm looking, if the market comes back, I'll take the profits at the scalp. But at the moment, this is doing what I want it to do, and that is drive through the actual psychological level there. So the market's driving through. When you get this, as I said in yesterday's market alert, you can continue to hold the position, as the market should continue to move lower. Also, keep in mind that the market goes up as a staircase but drops like a lift or elevator and moves sharply to the downside, which is why you're seeing these bigger bars now as the market's moving lower. And the reason for this is the market seems to be convinced now after Yellen's speech yesterday, one of the most boring in history, the same rhetoric, same repetition, that rates are going to go up in December, and that's fine by me, because the volatility that is going to follow in the new year is going to be just fine for us. If she does nothing, it will still be the same, but we'll have, I would believe, a lot more volatility because of the bond market. And I'll talk about that another time when we get a quieter day, and the effects of actually increasing interest rates and the knock-on effect to the bond market, and how that will also knock on to the stock market as well. So here the market has broken this line. We're sitting on 50 points already. We've got the losses back from the earlier part of the session. And as I've said on many occasions in the market alert, if you have losing trades in the first part, you will more than likely get them back in the second part, because if you have losers in the first hour, which is normally a very busy time, and if it's not, it'll be because Yellen's speaking or some other Fed member. So once the market's actually digested that, then it will tend to move, and that's what we're seeing here. So I'm going to speed things up a bit, otherwise we'll be here for several hours. So the market continues to move lower, and I'm just rescaling the charts as well. I'm going to move on to here. We'll just let this continue to run. So what I've done here, the market's come through, it's making these lower highs, and all I've done is put a 50% extension above the last rising low. I'm looking for the market to go down to the 17,750 level. Hopefully it will head down that way. If not, then I'll just move the stop down. But you can see now we've got a profit on the day after the first two losing trades as well. So even if the stop was at 50 points, we get back what we actually lost on the day. So we can let this breathe a bit, knowing that we can recover what the actual two losing trades, and also hopefully profit a bit. But the good thing is, having recovered those losses, we can allow the market to breathe a bit and let it do what it wants to do. So the market trades sideways, and then we see the market hit the 17,750, 84 points now. And at this stage again, I'm waiting to see if the market will actually move lower. It starts to come back. I'm giving it a chance to actually breathe, and we'll wind on a bit here. So we have a new signal come in here. So this is an ideal place. Again, you've got those lower highs to actually move the stop to. I'll actually remove that off the chart and replace it with an extension, because obviously I'm already selling the market, so I don't want to actually sell again. And then we can see that driving bar again, which we get there, and now there's a maximum of around 114 points profit on the table there. And then prices become sideways. They do move lower again. And you can see I've got the stop at the 17,750. Just want to see if the market will go down to this level. But prices come back. And you'll see in just a moment they eventually come back and hit the stop there for a second time as the market's traded back here. So we've got a situation of just taking the 84 points off the table. There was more on more profits available, but it was a case of trying to wait to see if the market would go down today. It didn't, but nonetheless still a profit on the day. So the remainder of the session, we see the market coming back, but too late to consider buying, and having made up the loss and a profit, there is no point in sitting there to try and squeeze the last bit out of the actual trading session there. In the daily charts, again, we can see we've got this situation of resistance at 17,915. The market attempted to take this out, but failed to do so. And a lot of high impact news today, and we've got a press conference at 1:30 from Draghi. Expect him to print more money and also possibly reduce rates as well. He's been hinting at it for weeks, so let's see what he actually does, which is the opposite, of course, of what Yellen intends to do. So there's a polar opposite situation arising there, where normally they all seem to be in sync, but Europe is going to see more money printed where there is today, but he's been hinting at it a lot. And also we got manufacturing figures. Again, all of this data is really bad, and yet Yellen, against all of this, is still talking about a strong labour market. Well, it's going to be, because she removed 94 million out of the actual figures, so the labour market does look good. It's one thing they can fiddle with impunity, because there's no way of really verifying these figures, so that's what they do. Unemployment is always the one that's fiddled more than anything else, alongside the CPI figures. So Yellen is going to testify at 3 p.m. Do not be in the markets at 3 p.m. and if you want to see what she's saying, you can get it on Bloomberg. I wouldn't bother though. I'd rather go and find some paint and watch that dry, because ultimately she's going to raise rates by the looks of things in December anyway, so there's no point. What you want to concentrate on is how a rate increase is going to impact on the market, and like I say, that's for another market alert on how the bond market will react to an increase, and also the derivatives market as well when she does this, or if she does it on the 16th of December, but that seems to be the consensus. So 3 p.m. don't be in the market. And the markets could be quiet beforehand as well, but it depends, you see, on whether Draghi, the old Goldman boy, decides to print more money, and if he does, that's going to send the market higher, and it'll be one of those that gets a lot of momentum behind it as well if it does. The stock market likes the cheap money. They borrow him for absolutely nothing, and then they're just sending it into the market, increasing valuations of the underlying companies. There's no real profits in these companies. There's been no recovery. We're still on emergency rates. You don't have to be a rocket scientist or an economist to work this out, that we have a grand experiment that is set to fail. So again, we've got this polar opposite situation of the ECB wanting to cut rates, negative rates, and also print more money, and Yellen at 3 p.m. going to convince the market she's going to increase interest rates on the 16th of December because of a so-called strong labour market and inflation. Absolute nonsense, but I'll save the rant for another day. So that's the economic news. Stay out of the market at 3 p.m. And finally, in the implied volatility, 1395 up sharply yesterday, of course, because the market moved lower. Yellow line above the blue line there. Right, that's it for today. Anything changes, I will let you know. But in the meantime, as ever, thanks for your support and also for watching. See you in the next one.